lot of calm. Our markets, of course, were a lot more beaten down and thereby this sharpish reaction. But let's welcome on board Kunal Bothra as well as Sunil Subramaniam and find out whether there's at least a near-term bottom in place for us. Kunal, what are the charts reading?
Yeah, the probability is very high that we could probably have made a near-term bottom for the index. Now, what this move does for the markets is not just to bring confidence back for short-term kind of traders, but I think this also indicates that this could now invite a lot of short covering for stocks which have been underperformers and the ones which have been seeing a lot of selling pressure. So what was going through for the markets over the last 4-5 days was a construct where sectors like the autos, FMCGs, IT, etc. These are the ones which are at the brunt of selling pressure, and now you've seen and strength was emerging into the banking names. Now what you're seeing is the banking stocks getting a lot more stronger. You're seeing formidable names like HDFC Bank, ICICI Bank, and even the PSU banking lot going through their own share of breakouts on individual basis. And this move could probably now trickle into these other underperforming sectors like auto, FMCG, etc., where you might probably expect that many of these stocks could start to get into a short covering mode. So this indicates that the markets could probably have formed a bottom at this 23,800 mark, and we could be looking at a index slowly and gradually into a bounce mode. But I think more than the index, what matters over here is the kind of short covering rally which we can expect into many of these underperforming sectors.
Right, let's welcome on board Sunil Subramaniam as well and find out what he's making of the market. Sunil, hi, afternoon. Do you think a large part of the selling could well be behind us, or do you sense further EPS cuts coming in post the earnings?
So I think the EPS story could see some more cuts, and I think the next year's forward P will get revised. So, but I don't think there's a chance for market to fall too much more, because you see this month's 1 lakh crore of FI outflow. Mutual funds did not entirely participate because there was fresh issuance of IPOs in the Indian market, and they concentrated there. Whereas FIs, I think only the Hyundai IPO, they made a significant approach. So money was locally used for the fresh issuance, and so they couldn't counter the FII selling. Now that is past us. I think there's a big Swiggy IPO, but apart from that, the domestic money is now ready to buy the stocks which the FIs have been selling and have corrected. So I think that second thing is that domestic fund managers have been smart enough not to buy every time the FIs sell, not immediately buy, but wait for the selling to come through, the prices to come down to more reasonable levels, and now they are stepping in to buy. So I think they've been very smart and staying on the sidelines on the initial FIS selling and then re-entering. Bear in mind that this FIS selling has got partly to do with the Indian earnings downgrade, but that I think now the price is reflecting. But the US uncertainty related selling, because money is flowing back into the US and the Japan, that is not India-centric. So I think domestic fund managers are sensing an opportunity, and I think now from now on, even there is further FI selling, domestic fund managers will step in. So I expect a sideways market to come through. Another 10 days, we'll have the full earnings picture, and then a fresh direction will be obtained. But bear in mind that November second half, December first half, FIIs, hedge funds will continue to book profits. So I don't expect a strong rally from the FII side to come in and buy, because whether Trump or Harris wins their economic policies, some amount the market is guessing, but I think you'll get clarity from their public statements when the results is out. So expect a volatile FII period continuing till the end of the year, but domestic fund managers, I think, are now ready to buy that which has not risen. And banking and financial services are top of the pack. In the last 1 year, even the Nifty has gone up 25%, the banking index has gone up only 20%. So clearly, good quality banks are a strong buy from domestic fund managers.
Okay, so the banking space remains the top of the pecking order if you're looking at buying, but the FIIs might not come back in a hurry. It might be sideways for the next couple of months, given the fact that November, December is usually a bit slow for the FII money. But bear in mind, we do have important, federal bank decisions also lined up after the election. So it promises to be a very, very volatile month. And then, of course, back home, we have the Maharashtra elections to deal with. So that is something as well that the market will try to get acclimatized to. But for now, 24,200 at the index level, a very, very, sharp recovery coming in. But Naresh, if I can get a view on the private banking names which are leading the charts right now. Okay, we have Kunal with us in the studio. So Kunal, your view on the private banking names. So Axis Bank, HDFC, SBI, IndusInd, ICICI, all of them are leading the chart. From here on, if I had to ask you the strongest candidates within private banks, what comes to mind?